from tradingtarot.com. In this video I want to talk about the coming stock market crash. I did a blog post on my website about this topic, tradingtarot.com, and you can get my full analysis, and in this video I want to talk with you about the coming situation, the coming crash of the stock market. Why do I think that there's a crash coming? Well, I would say we just have a look at the chart first. Just one more message before we start. I'm not a fundamental analyst. I just work with technical analysis, so I don't look into company data or all this stuff. I don't think that I can outsmart the market. But I strongly believe that the chart and the movement of price gives us information about not only about the history, but also about the future of the price movements. And I think we can find market structure and we can use tools, for example, like the Andrews median line. This is, for example, such a median line. And if one knows how to use the median line, this is a very powerful tool with an advantage. For example, with the median line, we know that the price meets the median line 80% of the time. So this just as an introduction how I view the markets. Okay, so here we see on the chart the S&P 500 beginning from 2018 until today. Today is 2nd October, Saturday, 2nd October 2021. And if we look at this, we see a nice bull trend, some pullbacks and so on, and a massive up move, very nice uptrend. And one could think, okay, what's the problem? Everything is fine, there's a party going on, and maybe the party goes on. Maybe. But maybe not. And meanwhile, I'm pretty sure that the party is over, at least for the next correction. And the next correction will have a dimension that I may call a crash. I think there's a correction or a crash, however you want to call it, of about 50 to 60% coming. So now let's have a look why I do think so. I do have another chart I want to share with you now and talk to you. So here you see again, this is the Standard & Poor's, the S&P 500 chart. This is a weekly chart. So each candle represents 1 week of price movements. The advantage of weekly charts is that you get all the noise out, all these short-term ticks and so on, and you get a very clear chart, and you find, especially you see the swing points very clearly. And here I marked 8 swing points. Number 8 is the future swing point, and we start here in the year 2018. We see there is a nice uptrend, then there's a correction to number 2, then an uptrend, upswing to 3, correction to 4, again a nice upswing, an uptrend to 5, a massive correction from 5 to 6, and then the now ongoing upswing, which already lasts since March 2020, since 1.5 years, 2.7. And this is the present point where we are now at the beginning of October 2021. So what's special about this chart? The one thing that really fell in my eyes was that we have a very certain pattern which is called expanding pivots. Expanding pivots means that we have higher highs and lower lows at the same time, which means the market extremes are getting bigger and bigger in both directions. We normally, if you have an uptrend, you have higher highs and higher lows, higher high and higher low. Or if you do have a downtrend, you have a lower low and a lower high and a lower low and a lower high, lower low, lower high. So these are normal trend patterns. But in this case, we do have on a large scale, since within the last 3 years, expanding pivots. And expanding pivots are a huge warning sign, and they tell us that the market is unstable. I did not think this out by myself, but I'm a great fan of this course. I think you get it for free somewhere on the internet. It's the Action-Reaction course from Dr. Alan Andrews. It's out of the 60s. Dr. Alan Andrews developed together with some other guys. Mainly it was Dr. Alan Andrews. He develops the pitchfork, which we now mainly call median lines. And he shows how to use the median lines in this short course, which is extremely valuable and for free as far as I know. You get it on the internet. And I highly recommend to study this little course with about 100 pages or something like that. So, and Dr. Andrews tells us that expanding pivots are a very dangerous sign. I think yeah, there it is. There's a case study here in this course, and it tells us here. You recall the expanding pivot rule states that prices will drop at least the distance below the 0,4 line, that they are previously above that line, and so on. Here only is the probability high that you can safely ride a long trend down by observing the phenomena, and so on. So these are just general information about the expanding pivots. But as I already said, the expanding pivot formation tells us that there is instability in the market. And we also see it on the chart. If we look here from the swing from 1 to 2 has a certain size. Let's have a look at the swing sizes. I listed here the swing sizes, the upswings first and the downswings second, and then my forecast for the now ongoing swing from 7 to 8. The upswing, let's start with swing from pivot 2 to pivot 3. It had a size of 401 points or handles, which is about 15.8% value increase. Then the next upswing is from 0.4 to 0.5. And we have an increased size now of 1,039 handles, means 44%, or which equals to 2.59x of the previous swing. Then the next upswing is from number 6 to number 7, which we recently had, and I think it's already over now. And this upswing had a size of 2,340 points. That's 106%. And again, it's a size of 2.25x of the previous swing. So we see the upswings are doubling from one to each other. The first one 400, then 1,000, and then 2,340 handles. So they are always doubling. So what's on with the downswings? Downswing from pivot 1 to 2, first had the size of 339 handles. That's 11.8%. Then from pivot 3 to pivot 4, we have 592 handles. That's minus 20%. That's 1.75x. It's not exactly 2 times, but it's almost 2 times, I would say. And then from pivot 5 to pivot 6, it's 1,196 points. That's again double the size from the previous one. And so it's obvious that the swings within this formation are growing, and they are always doubling. And the downswings as well as the upswings, they are always double to the previous swing. So now we are here around this area of pivot 7, and I think we already had the high, and we are in fact already moving down. The all-time high was at 4,540 in August, end of August 2021. So, and Then the question is, when this already is the downturn, the beginning of the downswing, how far will it go? I think it will go down about 50% to an area of about 1,940 points or something like that. And how do I come to this calculation? Well, I simply took the size of the last downswing, that's from 5 to 6, and 5 to 6 had the size of 1,196 points. And I multiplied it by 2 because that's the obvious average, doubling the swing size. And so I get a swing size of the coming downswing of 2,392 points. And that's the way here down from here today. 2nd August is today, down to estimated end of the year 2021. I think this will happen. It's already ongoing right now, and I think this crash will be finished, I guess, until the beginning or end of November. I think the massive movements will start on 6th October. We will see later why. And I think this will take about 2 to 4 weeks. I think there will be a little bit of a break, 2 movements and 1 break. But that's just my guess. I can be wrong. I think it's extremely difficult to forecast the crash itself, but it's even more difficult to forecast how the crash will look like, but I dare to try at least. It's my best guess. But I'm pretty sure at least that this crash is now ongoing, so this is for me no more question. The question now is only how it will happen and how far it will go. Okay, so now what are the further reasons why I think that this downswing, that this crash is now coming? We already talked about these expanding pivots. The second reason is that the upswing from 6 to 7 is full grown. What do you mean with this? If we compare this last upswing from 6 to 7 with the previous upswing from 4 to 5. 4 to 5 had a size of 1,039 points. And if I double this size, we come to 2,080 points. And which size do we have here from 6 to 7? We have reached a size of 2,340. So that's even bigger. It not only grew full up, so to say, but it even exceeded it. It already expanded a little bit more. It only would have needed about 2,100 points, and in fact it already has a swing size of 2,340. So it's time to finish this upswing for the S&P and to do the correction, which is the normal way for the S&P. I don't think that it is a special situation. It is simply a market situation. For sure, it will be a drama for many investors and traders because I think most don't really think that this will happen. Many think this will go on forever and ever, as it always happens in history. The party goes on and on and on until the music ends, and then you have a crash scenario, and nobody is prepared because they all thought it would end. There are endless gains in value, which doesn't work this way. So the upswing is full grown. We have the expanding pivots. Next reason for me that the crash is now coming and ongoing is that we have 2 important uptrend lines within this swing here. The main swing is this one. This is the major swing up. And if we put in a very simple trend line, here you see this green trend line. You see first here it touched, almost touched, it tested here. It tested this trend line in March this year. Then it tested, but it stayed still above this line. It gained a little bit up, and then here in May 2021, it broke through. So this trend line here is broken. This tells us simply that price is not able to sustain the same trend, the same increase in value of the stock market again and again and again, and it broke to the downside, and it chose a lower angle to increase the value. And here you see a new and a second trend line, this little black trend line here, beginning in May 2021 until today. And you see I zoom a little bit inside to make it more visible. So okay, so here you see we have again nice touches. Price respected this line, almost touched, and here comes again down to the trend line, and now price cannot hold this level again, and it gaps through. This is also very important. Price gaps through this line. It does not just move slowly through this line. No, it opened 72 points lower than before. There was a 72-point gap, and it continued a little bit more to the downside, and on the next day the market closed this gap. But there was a gap, and this also tells me that when a price moves very fast through a line, this line is important, especially if you have such a multi-pivot line. So this is an important trend line confirmed by several touch points with price, multi-pivots, and price zoomed through this trend line. And then it came back and retested the line. Price tried to come back up again and make a new high, but it didn't. In this week, it closed a little bit above this line, but this is not an exact science. This is just, well, it's forecasting, and it's trying to find trends. And again, it broke to the downside in the coming week. So we see there are two important trend lines are broken, and price breaks and to the downside and produces a gap. And this is the fourth main reason. So I just have to adjust my chart a little bit. One moment, please. This is reason number 4. Reason number 4 is gap down. So why do I think they are important? Because if we look at the corrections, the previous 3 corrections since 2018, here from 1 to 2, there's a gap down with 21 points. At pivot number 3, there's a gap down with 118 points. With pivot number 5, there's a gap down with 80 points. And here at pivot number 7, there's also a gap down with 72 points. So we always have a gap at the beginning, a gap down at the beginning of the down movement, of the crash, of the correction, however you want to call it. And we also have it now. It happened. The trend lines are broken. We have a gap. We have expanding pivots, and the upswing has its full size. So the stage is completely set to initiate the downturn, the correction, the crash. So, and where will this crash end? How far will it go? Will it be just a little bit 10 or 20% crash? No, I don't think so. Because why? Because we have expanding pivots. Look at the last 3 downturns at pivot 2, 4, and 6. Each was lower than the preceding one. The pivot 4 was lower than 2, and pivot 6 was also lower than the previous one, than 4. And so we also have a downtrend of the lows. Each low was lower than the previous one. And this tells me that the next one, the number 8, will also be lower than the previous one, and I simply projected here a simple trend line from 2 to 6, and this gives me the possible bottom, the end of the crash of about 1940 or something like that. Maybe it's even lower, I don't know, but I think this is a very realistic and a highly probable future development of the S&P. And yes, I'm doing this video to inform you, and maybe some guys of you see this and can prepare. It's not so much to make the big profit with the next crash, it's more to be prepared. I think a lot of people are putting their savings and so on for retirement, and I don't know, for family and college fund and so on, put it in stocks. Well, and then comes a crash of 50 or 60%. That's devastating, and I think that's a huge problem. And nobody talks about this, or very few people. Well, I'm just a small guy, but I try to reach some guys. Maybe it helps someone. On the other side, you also can try to profit from it. That's absolutely okay. I think these are open markets and it's legit. I think it will be a hard trade. I will try to get in this short. I'll show you next. I think there's a good profit in this trade, but also I think you have to get in early, not too early, at the right point of time. Because when this avalanche starts, I think somewhere there within this waterfall, I think it's almost impossible to get in, because the stops will kill you. The swings will be so huge. They will swinging up and down, probably multiple hundreds of points. And I think this will be extremely difficult and extremely risky. I think the only way to catch this move is to get in early, maybe within the next 1 or 2 weeks. I think next week could be the starting point. It's my rough estimation. I think 5th or 6th October could be the start of for the big selling off. And if you manage to get in a calm, moderate situation and have the coolness to hold this position down here, I think that's a good profit possibility. But I don't think that you can start a lot of trades within this area. I think this will kill a lot of traders. So that's my point concerning this. And now, yes, you can read all this on my blog, tradingtarot.com. I do have a post about this topic. It's this one. My computer is running a little bit of hot. It's a warm day. Yes, that's my blog, and here you see S&P 500 on the verge to a 50% crash. That's this post I'm talking about right now. You see there's a short video one I already made, and you see you can download and see the charts and read again the reasons why I'm sure that this downturn is coming right now. And yes, you can make up your mind. You can say, Peter, you're crazy, this won't happen. It's okay for me. I just share what I think. Disclaimer, this is no investment advice or something like that. That's just for educational purposes. If you decide to trade or to invest on the markets, you do this on your own risk. It's not my business to take your decisions and your risk. You have to take your risk yourself. And trading is risky, by the way, very risky. You can lose a lot of money. Okay, back to my post. I wanted to show you, yes, and another reason I just put in an update today in this post. We also have the famous shoulder head shoulder formation. You see here the left shoulder, the head with a lower low, the right shoulder, and also a lower low. So we have lower lows and a confirmed lower high. And right now, yesterday, Friday, 1st October, price bounced up a little bit. And I think it will do this a little bit more. this is my forecast I did yesterday. You see here the S&P in a daily chart, and here I'm using a median line to describe the frequency, the swings of price. And I chose these 3 pivots to draw this down trending median line. And there are some important or some interesting things. Here's a point. Here are interesting points. Multi-pivot lines. Price respected the same slope as here and made a high. Here, price made a low. It didn't really reach the lower median line parallel, but made a pivot here. And yesterday, or the day before, Thursday, was it? I think 31st September. Price also made a pivot right on the same sliding parallel line. So this tells me this line is important. At least it was where it is at the moment. So now the question is what's going on within the next few days. I think this move up here already happened as I expected it. This zoom here, because it zoomed through a downtrending median line parallel from this price move. So it means it ended this down move with a counter price action. It moved through slightly through the median line, and now that's the place where price stands at the moment. I expect to see a pullback down to about 4,300 points on Monday, and then moving up in smaller steps until price touches this median line here. Maybe 1 or 2 touches. How did I draw this one? I made it simple. I just copied this frequency here with a doodle over here, and this gave me an idea about the nature of this swing, and I can check then the nature of this last swing, which is, so to say, the brother of this swing, and then I can view it together with the other lines I know which are important, and I get a pretty good idea of what price will do. So for Monday, I think it will go down to about 4,300. Then I plan to get in long for Monday and maybe Tuesday to about 4,450 points. And this, I think, will be the ideal entry point to start a short position, which I think, which I plan or try at least. We will see how the market will develop to hold it through the crash down to the bottom. At least that's my plan. If price would break through this sliding parallel here, this one, and also through this parallel line here of the median line, this would be a very bullish sign and would show me that the crash is postponed, and I would have to wait with the short. So if I get in here short and I see price breaking out against my position, I would close the position, because this would be a very bullish signal which counterfies my trading plan. Then my plan would be invalid. But at least as long as price stays below this sliding parallel, or at least below this parallel here, I expect my trading plan and my idea valid. And then I think starting on 5th or 6th October, something like that, we will see breakdowns here in steps and the beginning of a massive sell-off. Yes, and okay, and how could the sell-off look like? this I think is a very difficult task to get an idea of this. But I tried to develop a roadmap how this future crash could look like. It's very difficult to forecast the crash itself, and it's even more difficult, I think, to tell how this crash will go on. But at least I try to make a plan, and I will see with the ongoing price action what's right, what's wrong. So I always try to make a roadmap of what's going on with all the information I have. This is an ongoing development, an ongoing developing plan as price reveals ongoing, of course. But right now, on 2nd October, I could imagine that this is how the crash could look like. I think we will make it up, as I just told you, on Monday, on Tuesday, up to 4,440 points because of the situation I just showed you. And then I think massive down movements will start. And I expect here a down movement of about 1,300 points. Why do I think so? The reason is here this line. This is a median line which I created on the top, on the all-time high. This is a very small, these are very small points, but it is very often that price comes and meets this median line in 80% of cases. The interesting thing is, normally price would have to be about here, along this line, but there is a space which increases the distance between the actual price and the median line. And I think it increases the pressure on price. And at this point, I think the pressure will be so huge that it will crash down in an instant action. It will meet the median line, and price either reverses on the median line or zooms through. And as there's a massive turn, I expect, I think it will zoom through and it will expand about in the same amount as this expansion away was. It's like a pendulum. Dr. Andrews calls this an action line. We have a center line here, the action line, and then the pendulum pendles into the other direction in the same equal amount, opposite and equal. Action and reaction are opposite and equal. So we have a reaction down here, so price would have to meet pretty fast here at this reaction line, and this brings us to a price level of about 3,100, and I think this will be about the first move. This can also happen in multiple. Of course, I don't think this is just one move. This probably will be a lot of moves, but I don't know how they will look like. And if price arrives here in this area, it could correct a little bit, but not too much. Maybe it makes wild swings, I don't know. And then I can imagine when it hits again on the downtrending median line, it could find resistance here and again off-selling and do the same down move again as it did here. So I just copied this down move, and then we are down here at the price level of 1,960. And the interesting thing is that I did this calculation independently from my previous one. There it is. One moment. Here I calculated the price move down to 1,943, but just based on swing size, doubling swing size and expanding lower lows which brought me to a possible bottom of the crash of 1,940 points. And this calculation brought me to the pretty same level of 1,960 points. So I think there's a pretty high chance that this will happen about this way. You can look at it on my blog, tradingtarot.com, and I think this could happen within the next few weeks, probably beginning in the first week of October, so 5th or 6th October. I think this will start, and I think these crashes mostly happen pretty fast. They don't take too much time. Maybe this is a shorter period, maybe this happens faster in just a few days. This would be a period of 2 weeks. A similar situation already happened. Let's see if I find it here on the daily chart. Just a second. On the daily chart. Yes, no, one moment. Yes, there it is. This is this situation here in 2018. Just make a little bit bigger. We also see here a crash in 2 steps. And this is a pausing period of about, it was from October 11th until 10th of December. This was a 2-month period, even 2 months in a range, and then the second part of the crash, part 1, pausing, part 2. So quite a long time. I could imagine this could happen again because of these median lines here. Okay, so that was it for today. I hope you take care and prepare. Think about it. As I said, it's no investment advice. I just want to warn you, for everybody who is interested in this topic and who wants to think for himself. I don't think that the media are telling us the truth. Mostly they just want to sell us something which we don't really need. If we turn on our brains and our minds, I think we can protect ourselves from such incidences. And yes, I wish you all the best. Have a good time. If you like this topic and this video, subscribe to my channel, visit my blog, leave a comment, like it. I like it. If you like it, it gives me another reason to make more of these videos. I'm not a pro, I am a tyro. That's the reason why it's the Trading Tyro. So this is just a side hustle of myself, which I love to do. I'm interested in this topic for years, and I love trading and this analysis. It's very interesting. And I hope to see you again and have a good time. See you. Bye-bye.